Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. This video, I wanted to go over the ThetaTraders.com 0DTE trades that we took in the last week from end of August to September 2nd. They were all winners, so 5 for 5. Had a really good week here. Made 10% on your money in the week. And we're going to go through the trades, what the strike prices were, and when we close it. And you'll see why we take early closes and take profits usually pretty quickly. Let's get right to it. Okay, so here's a spreadsheet that ThetaTraders.com members receive. We post it on the Discord around 9 o'clock Central Standard Time every morning. So looking at, on Monday, we did a call credit spread. 40.37 was the strike price. We went all the way up to 40.90 to 4100. Delta 0.07. Made $40 in premium. Bought to close at a 15 for a 2% return. Then on Wednesday, another call credit spread. Markets were looking down the first 2 days this week. Went again about 60 higher on the call side. Sold for $35, bought it at $5. It's a 2.5% return after commissions. Wednesday, we went Iron Condor. 3996 was a strike. We went about 60 lower on the put side and another 60 or so on the call side. Took in 70, bought it back at 40. Thursday, calls credit spread side. Went about 60 higher, took in 45, sold it for 20. And then Friday, put credit spread side. It's down about 65 on that one. Took in 35, sold it at 15. So these were all winners. We started at 909.36. We're using $1,000 now on these contracts because we're doing 10 whip spreads. The 909.36 turned into 1,009.84. This ends up being a profit of $100.48 for every $1,000 that you're trading with. And that's about a 10% return in just a week. And if you look at SPY, it was a pretty down week in general. This was Monday at open around 40.38 or so, and we closed around 39.26. So if you just bought and held SPY, SPX, you'd be down quite a bit this week. But using these 0DT strategies, you could actually make a pretty good return. If the market goes down, or even if it goes up, you can still make some good 2% a day returns when it works. So what I did here is on the green were when I did a call credit spread, and then on the red is when I did a put credit spread. The only day this week we did an Iron Condor was on that Wednesday. So we're typically entering the trade on the second candles here in the 30-minute chart. So in the second candle, you usually have a good trend and range of where we're going to go. You see on Monday, it was a bit up and down, but ended a little bit lower. We're worried a little bit more about the downside, so we did a call credit spread pretty far away from that price, and then we closed it pretty quickly. Same thing, it was pretty obviously downward on Tuesday. Got in at the second red candle. Call credit spread only because we don't want to take the risk on the downside. Got out pretty early as well. Wednesday did have a bit of a range, but the premiums were worth doing an Iron Condor. So we decided to go call and put credit spread, and then get out a little bit later than the others, around 10:30 or so, but still made our target return. Thursday was another down looking day. Went just call credit spread side, sold it here, bought it back here for a good 2% profit. And then on Friday was another pretty down day. We entered pretty much around the low here. Got a little spooked in the beginning, so I had to stay in the trade a little bit longer and then got out around here. So what you're noticing in these trades is we're staying really far away from where the stock price is at the time. And then we're also trying to get out relatively early to take our profits. Don't try to get too greedy trying to get all of your premium, because you could have got hurt pretty badly, especially on Thursday with this big up candle and Friday with this big downturn that we had, especially near the middle of the day. So that's why we want to take our profits, get out, get our target 1 to 2% in returns. Just quick note, these little horizontal bars here were different ranges that we were considering, and I made these bars on Wednesday during a live Zoom meeting with Theta Traders members. So we're talking exactly what strikes to consider for those days. I made this on the Wednesday night around here. And then you're able to see the different possibilities in our strike prices. So get a little bit ahead of the game. That was assuming that the futures market wasn't going to change much. And so one of the main things to notice for this week is we don't just do the iron condors every day. We want to look at which direction the market's taking us. The VIX was increasing as well, so you got to consider that as a possible risk factor. And if you see a market going up quite a bit, you usually want to go on the downside and do a put credit spread. You see the market tanking a lot, you probably want to go on the upside and go call credit spread and not necessarily take that directional risk of one direction. And then you want to get out of your profits at your target percent. Usually you go for around 1.5 to 2% for the day. Again, if you'd like these alerts every day around 9 o'clock Central Standard Time, we'll go over what SPX is doing right beforehand, look at the call, put, credit spread side, or even iron condor, and then possible prices to get out. Feel free to join the thetatraders.com group. We have about 70 members now. So a lot of experts, intermediates, and even beginners that are just learning how to do these strategies. So free test run next week, thetatraders.com, and get one-on-one help from me as well. So again, I'm the investing teacher, high school science teacher, teaching others how to invest. And let's have a good rest of the week.